Hey everyone, welcome to My Millennial Money Express. I'm Glenn James. Thanks for joining me today. I do this podcast as a bit of a short form, usually under 10, 15 minutes where possible. And you can watch the videos on YouTube, which is Glenn James. It's separate to the My Millennial Money channel. I've got Vince Scully joining me again today. Hey Vince, how are you?
G'day Glenn.
Now, question here from Marja, if I'm pronouncing that correct. Do I have to go with a lender my mortgage broker chooses? If I find a more competitive online lender, can I essentially give the broker the flick? And I will say, Vince, Life Show, but you guys are mortgage brokers, so it's not as if you don't know about this.
Yeah. So the short answer is you can change your mind at any time. The bigger question is, should you? And the choice to do so based purely on rate is a very odd way of doing that. Marja's bigger issue problem seems to be that she doesn't have full trust in her mortgage broker. So she's looking to second guess what her broker is doing. And that's a sign of a dysfunctional relationship, which is not particularly conducive to getting the right answer at the right time. So I think that's her biggest problem. And this focus on rate is a very strange...
Well, it's half fallacy, half valid.
Yeah, I mean, obviously...
We all want the cheapest rate.
Yeah, exactly, right? But in many cases, your choice of lender is not a price decision. Price matters when you can get the loan you want at the time you want it. And rate matters when you can borrow what you want to borrow. But until that point, rate is academic.
Yeah, because the best rate to have against your home is 0, which means you own it, right? Like that would be an amazing goal.
Yep. Well, everyone needs to get there by retirement. Yep.
Exactly. And then maybe the worst rate in this market at the moment could be 7% because you've had bankruptcy 3 years ago, you work part-time or you've just started your business, so it's a risk thing. So 0%, no risk, which is basically I own the place, so I've got no mortgage risk. 7%, you're a high-risk borrower, so the banks or the lender will put a premium on that.
Yeah. So if you're PAYG, earning a big income, borrowing a small multiple of your income and borrowing a low percentage of the value of your house, there's never been a better time to be a borrower. Banks are falling over themselves to give you a good rate. And you may very well, in those circumstances, get a good deal online. If, however, you depend on overtime for some of your income, you're borrowing a high percentage of the property's value, you're borrowing a large multiple of your income, you have some credit impairments you talked about, some of your income comes from rental properties, all of those things will affect which lender you should go to above and beyond price.
Yeah. And the main thing I see with these questions are the online lenders with these amazing headline rates. And then you go, well, my mortgage broker said that instead of 1.99%, it's 2.6 because the broker knows, well, they should know that because you wanted to borrow 95%, it means a higher risk for the bank or the lender, which means it's a trade-off. So it's almost a fallacy that, as you said, like I say it's half true because yes, everyone wants the cheapest rate, but it's a fallacy because if you want multiple offset accounts and you want half of it on fixed, half of it on variable, and some unicorn tiers to be sent to you once a month from your lender, you'll have to pay for that.
Yeah, it comes back to what are you trying to buy?
Yeah,
and loans are not like eggs in the supermarket that you just pick a different pack if it's more expensive. It's really what are you buying, and you're not just buying $250,000 for 30 years. You're actually buying a whole bunch of product features and the way the lender assesses whether or not they lend it to you.
We'll wrap this express up. Do you want to give one final piece of comments to Marja, and I'll do the same?
Okay. When you're choosing a mortgage broker, the most important thing to look at is, does this mortgage broker deal with people that look like me? So if you're a first home buyer, you don't want to choose a mortgage broker that focuses on big
Commercial deals
or property investors who own 10 properties. You want someone who understands and can empathize with your position and knows the sort of things that you are likely to be concerned about. And the second thing, you want to look for a mortgage broker that's not linked to one of the lenders. So a lot of the big brands, for example, Aussie Home Loans is owned by the Commonwealth Bank. And many brokers are licensed through companies which is owned by the National Australia Bank. All of those things should give you pause for thought. That's not to tar all mortgage brokers.
And it's not to say you're going to get a bad outcome.
No, that's right. It's just there's some conflicts there that need to be managed, and you need to be aware of them.
Yeah.
So what are the conflicts and what's the likely outcome?
Yeah. And I guess I would finish with saying to Marja what I would probably do if I was in your situation. And again, it goes back to relationship. If you don't feel comfortable to go to the broker and say, hey, I've just seen this online. Can you see if this applies to me? And just seek first to understand. And to be honest, any good, and I won't say broker, I'll say person who wants the best for their clients, if they can't actually provide that, they should encourage them to be like, hey, I can't actually go anywhere near that. I think in this instance, you're probably best to jump online and give it a crack.
Yeah. I mean, I've done that on a number of occasions this year.
Yeah. Yeah. So there we go. Thanks so much for listening, everyone. Thanks, Vince, and we'll see you guys soon.
It's been a pleasure.
Bye.